Welcome back to Chart Wizard Trading. Put a little figure out of the book today. This is Bitcoin. So we're going to talk about. Here's a little alternative idea on the landscape today. This is directly out of, so this top picture here. This is directly out of Frost and Prechter's Elliott Wave Principle. Okay. It is figure 2-16 in the book, where it's essentially talking about depth of correction, okay, the guidelines. And specifically what this paragraph is referring to in depth of correction is that a fourth wave typically ends near the terminus of the fourth wave of prior degree, okay, which in this case would be this extension. Okay. In this case here, okay, as you can see, we have, I'm gonna mark on the chart here. In this third wave is an extended third wave, but within the third wave is a fifth wave extension, right? So you can see 1, 2, 3, 4, which is where the guideline is, and then 1, 2, 3, 4, 5 for an extended fifth wave of the third wave, right? In the case of Bitcoin down here, we have 1, 2, 1, 2, 3, 4, 5, 4, 5. Okay. But what it's pointing to is that the guideline is the 4 that's further away, if you want to think of it that way. So this being a fourth, let me take my marker so I can draw on it. This being a fourth wave and this being a fourth wave, the guideline is, in the bullish case, the lower of the two, right? So in the case of Bitcoin here, this is a fourth wave and this is a fourth wave, right? And the guideline is the lower of the two. And what it goes on to show here, and I've kind of labeled this just like the picture shows here. Actually, I forgot one little label that goes right here, and this should say sharp. So I'll add that in now. Sharp. And what that's referring to is wave 2 is sharp. Okay. See in this photo, there's 5 up to a 1, A, B, C down sharp. 5 up to a 1, A, B, C down sharp for your 2. Come up here, you have an extended third wave, and as I just mentioned, we're going for the lower of the fourth waves here as the guideline. You see wave 4 limit with the dashed line in the photo, and wave 4 limit, the dashed line here. Bitcoin did not top in a third wave at the peak, at the all-time high, nor did the example in this chart. Okay, you have a third wave here, you make a higher high with a flat, higher high with a flat. So it says complex flat, that's your A wave, ABC, A wave, complex flat. Okay, which, where does it bottom? Right? Let's talk about these fourth waves here. Where did this complex flat, the C wave of the complex flat bottom? Right in this 4, the first 4. Remember these 2 4s here. So you bottomed first in this one and second in this one when it was all said and done. Well, where did this flat bottom? In the first one. There's the second one, right? Here's your complex flat, bottom in the first one. Here's a complex flat here, bottom in the first one. Okay. Then this had a simple zigzag up. Bitcoin gave a double zigzag up. WXY, 2 zigzags. Instead of simple zigzag ABC, it gave ABC twice. So A, B, C. You have a correction. A, B, C. Okay, that's a double zigzag, which creates yet another peak, right? So you can see the top of the third wave, you have a new peak, corrective peak, third wave, new peak, corrective peak. You get a drawdown that bottoms in the first fourth wave, a drawdown that bottoms in the first fourth wave, a new corrective peak, a new corrective peak. Okay, so 3 drives to a high, 3 drives to a high, and then 5 waves down. So in this example, you have 1, 2, extend third, 4, 5, down into the second 4. In the case of Bitcoin, 1, 2, 3, 4, 5, into the second 4. Let's get rid of all that schmuckus there. Okay, so that's, and then that's a sideways correction. So this whole thing here is a sideways correction, as just like the picture showing here. This whole thing is a sideways correction. All right. Now, how you channel this. This is a typical impulsive channel, is what Frost and Pechter put in their book here. So you take a line and you connect the ends of wave 2 and 4. Okay, so that's what I've done here. Connected the ends of waves 2 and 4. All right, and then you drag this top line up. You're creating a parallel line to the top of the third wave. Right, top of the third wave, right there. Exactly what they've done. And you can see each corrective new high breaks the channel line. Break the channel line, come back in. Break the channel line, come back in. What did we do here? Break the channel line, come back in. Break the channel line, come back in. Now this note here, it's kind of hard to read because I just copied and pasted it out of the book there. But what it says is wave 5 should peak in the low 900s. Okay, on this chart, this is an hourly chart, so the low 900s of the Dow, against the upper channel line. Okay, and now I've modified slightly that just to fit Bitcoin. Okay, and it says wave 5 should peak in the low 70Ks against the upper channel line. So I'm saying the same thing as what this says, and just fitting it to the price of the channel line for Bitcoin. Okay, and as you can see, it did exactly that. 5 waves up to a 5th wave that should peak in the lower 70Ks against the upper channel line. And if you were to draw this one out, okay, whoops, my marker. If you were to draw this one out, okay, you would see 5 waves up that peaks against the upper channel line. And that would be your 5. Okay, feel free to look that one up in the book. It's figure 2-16 in the LOE principle by Frost and Pechter. Now let's zoom in a little bit and let's look at a couple of things. There's, give me a, we'll take a pause break here. Okay. This is the same chart. All I did was zoom down real low and I didn't want to waste your time. So I took a little pause break there and we're going to talk about this price action. Okay. From the high, we have a legal and clean 5 waves down. 1, 2, 3, 4, 5. Okay. That is a legal and clean contracting diagonal. And I do want to actually make a little shout out to, let me go look it up here. What was his name on there? Okay, it's Cohen's Trading. He's got another channel out there. I'll link to it down in the description. Okay, and he brought a point up that the rules were modified in the latest edition of the Elliott Wave Principle. I didn't know that they had changed till I watched that. And lo and behold, I went and looked it up and, well, hot dang, It was there, and they had changed the rules. So the only thing there's only one small thing that had changed, okay? And it's specifically in regards to a diagonal. Okay, the thing that has changed from a diagonal, okay, the old rules used to have, like if this is a contracting diagonal, then 1 has to be the longest, 3 has to be longer than 5, and 2 has to be longer than 4, right? The new change, the only thing that's different is that wave 1 is out of the picture. Doesn't matter. Wave 1 does not matter how long wave 1 is. The rest of the rules apply, okay? So to contract, you still have to get, 4 has to be smaller than 2 and 5 has to be smaller than 3. The only difference is you no longer care how long wave 1 is. It could be the longest, it could be the shortest, it literally does not matter. Okay, that's the only change to the rule, is that wave 1 doesn't matter. So in that respect, what you want to measure here to find a legal diagonal is the second wave, firstly. So that's what we'll do here. We'll measure the length. What I'm doing is measuring the length of the second wave. And we want to make sure, let me get rid of that 618. So because it's not relevant in this case. So all we're looking here is the 1-to-1, right? So as long as the fourth wave wasn't longer, so 71.5, wasn't longer than 71.5, then it's shorter by default, right? It's less than 100% the length of, all right? So 4 is smaller than 2, and then you just have to measure the third wave, okay, and make sure that the fifth wave is shorter. So I measured the length of the third wave here, and then drag to the start of the fifth wave, and you can see as long as 5 didn't get as long as down to 54.4-ish, okay, then that's clean. Now it's shorter. So 5 is shorter than 3, and 4 is shorter than 2, so therefore that is a legal interpretation of a leading diagonal. And since that is a legal interpretation of a leading diagonal, we have to respect it. We have to respect the fact that it's there. Okay. We're not going to be able to confirm this until hindsight, but that doesn't stop us from trading it. Okay. But regardless, this is how we would put the trend lines on that to signify that it's a leading diagonal. Okay. So next, what we want to look at is, well, what does the book say? Well, a couple things I'm going to point out here. So this is the upper boundary of that trend line I was talking about, right? And you can see that price met it, overthrew it, which is perfectly acceptable. You're allowed to have an overthrow as long as you have an immediate return to the channel. That's exactly what we got. Had an overthrow, immediate return to the channel. Then we came and back tested that channel and was immediately rejected from it and still haven't come back to it. Okay. What the book says about depth of correction guidelines, there's only one thing in the entire book that references depth of correction in regards to a leading diagonal. And that is, it says when wave 1 is a leading diagonal, expect a deep correction. Okay, what is deep? I don't know what the definition of deep is. That's probably slightly subjective, but I think we can all agree that, what is this, about 90%? Something like that. Let's start at the top here and check it out. With my calibrated eye, just short of 90% retracement. I would say that everyone should consider that deep. Okay, it can't break the high. That's a rule. Okay, but it says expect a deep correction. So as of right now, all we have is a zigzag here. It's a regular old stinking zigzag. A simple zigzag, if you will, labeled A, B, and C. A, B, C, right there. That's it. That's all we have right now. It's a zigzag. In fact, if we're going to use some guidelines here, then you channel it. All right. So what you do is you draw your parallel lines, just like you did for the impulse there. But you go start of A to end of B, drag it to start of A. I call this a base channel. Okay. Typically, 3-wave moves. It's a guideline. Okay. Typically, 3-wave moves are contained within parallel lines. Right. Unlike impulses, which are not. Impulses are only contained after you move the lines. Okay. So if you were to start this right now, and then say this turns into an impulse, right? Let's say for sake of conversation, it turns into one, right? I would expect it to break this, find support, and keep going. And then you have to adjust your channel, and you find your 2 and your 4, just like we drew for this one, and your 2 and your 4 should contain your 5. Okay? Your 1 and your 3 should contain your 4. That's how impulse channels work. Corrective channels should just be one base channel, as I call it. 3-wave move, base channel, contained by parallel lines. Okay? That's weird. Did this just open a new candle? And how do we get all that price action if it just opened a candle? That's weird. Okay. Regardless, let's make this bigger. But that's what we have right there. Now we can get smaller. All right. Now let's check out what the price action is off of this high. Okay. So let's come down to the hourly. All right. As we can see, we're contained by parallel lines, blah, 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 blah. We can dial this in. Now that we're on the hourly, that looks good. Drag to the top of the A. It should be here. The B's here. Okay. And then we have simply a 5-wave move up in the C. Now this is ambiguous. Okay. This could be counted either way as 3 or 5. I can count this about 3 different ways. Just this move down on the hourly. Okay. I can count that as an impulse. I can count that as a double zigzag. Okay. I could probably count it as a single zigzag if I really put my mind to it. Okay. Regardless, it's very ambiguous on what it is. No idea what that is. Okay. But one thing we do know, if we do the base channel technique, okay, so we already know this is fully contained so far. We do the base channel technique. So if you say this is a 1 and a 2, right? Then you would go like this. Come on, buddy. Messed that up. Hold on, let's bring it back. There we go. Right here, right here, right here, right? That would be your base channel. And as you can see, price eventually broke down from it. All right, messed around inside, blah, blah, blah. Which probably tells you it's your wrong channel. If you're just messing around in your channel and price keeps moving, you're looking at the wrong thing. Okay. So then what we can do, say, okay, that means probably all of this is something. So you can say, now we got lucked out here because you got this pivot and this pivot. You don't know which one ends something, but they both kind of hit the same spot. Right? And you can drag down to this extreme, and this channel was broken. So you kind of got something that's like, well, it is only a guideline, all right, but it didn't stay broken for long. We kind of came back, but then we broke it again, and then we had to come back in, and then went sideways. So not real confident on that. But if we look at the move back up, if we take this, drag it to this extreme, up to the top, well, now that's all contained. Right? And is this as a 3-wave move, if I make it one smaller, okay, if I just focus on what this would be here, okay, then we're contained. Like, go like that. Okay. You get a little overthrow, return to the channel, a little overthrow, return to the channel. All right. And then this looks like a flat. right here in the middle. Right there. So, jury's out. But I think I would lean bearish here, right? Because what do we have so far? All we have is two zigzags connected. So that's a zigzag. Okay, and then you have some sort of correction here, and then you have another zigzag. It's a double zigzag to reach. Is it a guideline? Well, let's see if I labeled it a certain way. What did we talk about at the very beginning of this video? Fourth wave corrective guidelines. So I'm going to throw some labels up here, and we'll talk about it. Or at least I'll talk about it. You guys can talk about it in the chat. What if I did this? 1, 2, 3, 4, 5. With an extended fifth wave. 1, 2, 3, 4, 5. I told you, there's multiple ways you can label this. And that's one of them. All right, you could even take this as a truncated fifth, as an alternate idea. You can drag these both over here. You can come down here like this and say that that's your 4. This move up here. 4, 5 that truncates. All right, but I don't think it truncates in line. Let me check. Yeah, it doesn't in line. So if we were to label that in line, what you have here, you take a peek, we have a 1, 2, 3, 4, 1, 2, 3, 4, 5. That's a valid interpretation of what we're witnessing here. Okay. If that's the case, then you should expect a 3-wave correction to reach a guideline, which would be the previous 4th wave, near its terminus. And what do we have? A 3-wave move that is fully contained by parallel lines that stops near the terminus of a previous 4th wave. The second one. What did we talk about on the way down in the bigger picture? There's a 4. There's a 4, because you have an extension here. All right, now what the actual guideline is, if a wave is extended, what the book says is that it will end near the terminus of the, if the 5th wave is extended, it will end near the terminus of the 2nd wave of the extension, which would be here, which these are so close together. You didn't quite reach that, okay, in line at least, but you did that, and that is near the terminus of the 2nd wave of a 5th wave extension. Regardless, you've met a guideline. So you have 3-wave pullback into a guideline. All right, what that tells me is that what the evidence points to, since this is contained by parallel lines, okay, this is contained by parallel lines, this is not, okay, that's telling me that most likely now what we're looking at is an impulse down followed by a 3-wave correction, and that this low will break. That's what this is how I'm reading the chart right now. That's what the probability tells me for Bitcoin. Okay, now whether that starts something bigger, I don't know. Right? Because there's other interpretations here. Right? It doesn't have to be just this leading diagonal interpretation. There are other interpretations. You could easily count this as a double zigzag instead of a leading diagonal. But it is legal as a leading diagonal, and that's my point. So we have to respect the fact that it's there. All right? But right now it looks to be probably a pretty decent short setup with a stop up here. Right? No reason that this high should break. It's already met the guideline. Right? So if it's going to continue down, this is a nice risk point if you were a risk averse trader. This is what we call a high confidence setup, and you have a built-in stop. All right. I know this is financial advice. I'm just sharing with y'all, okay, how this would be traded with full expectation that at a minimum, this low will break in 5 waves. Now, where it stops, I can't tell you because there's lots of options out on the table. All right. You could make this a big triangle. Okay. If you were to count this as a double zigzag instead of a leading diagonal, meaning like this. All right. So this being a zigzag, that's your X wave correction. Then you get this, a flat, okay, and this for a double zigzag. And that could be an A wave of a triangle, right? And that could be a B wave of a triangle. And now you could be working on a C wave of a triangle. Then you'll get 3, and you'll get 3, C, D, E, which would eventually break up. If that were the case, you have no idea. You have absolutely no idea. So all you can do is trade what's right in front of you. Okay. Right, if we start moving hastily, okay, at a minimum, I'm gonna watch. Right, on this short trade, I'll just watch for 5 waves, and I'm not going to outrun my probability. Right? If it wants to keep running, then I'll keep holding it. If it looks like it's going to come and retrace, okay, then I won't. Then I'll take the profit. Right? How do you know it's going to retrace? Well, we talk about this kind of stuff every day in the Discord. Wavecounts.com. It's a free trial, 30 days. It's only $25 a month after that, and we go over all these low time frame charts, all the various possibilities, so you can make intelligent and informed investing decisions on your own. You can bounce your ideas off the community. You can learn if you don't know how to do any of this. It's a great place to learn. Very friendly. No one's mean. We're all welcoming. If you want to learn, give us a shot. Wavecounts.com is down in the description. Okay? But all in all, this is a serious possibility for Bitcoin that we have to pay attention to. Have to. We can't ignore it. We can't tell the market what we want on hopes and wishes and dreams. We have to pay attention. I had a video a few weeks ago that saw this as a flat pattern right here, which the expectation then would have been up, a pullback, and go. Well, as you can see, that didn't happen. Okay. Now we traded it like that. It got pulled back. The trade got wiped out. Did we lose money? No. Wow. Risk management, my friend. Risk management and probability. See, there's too many people out there, as I read through the comments and such. They're looking for something that doesn't exist. There is no such thing as Nostradamus. That person does not exist. If you thought you found one, it's because that person got lucky. And they will never call another top or bottom ever again. Why? Because they just got lucky. You need to change your mindset. You're not looking for Nostradamus to tell you exactly what price and what line things are all going to go to. All right, what you're looking for is a proprietor of probability. You need to use the power of mathematics and shift that into your favor and manage your risk appropriately. You're not going to be right every time. But here you got a good setup, right? With a small risk. This is what we call a high confidence trade setup. Okay. Another thing to take into consideration, I'm going to up the time frame just slightly here to the 4 hour. Okay. Another thing to take into consideration, I'm going to go ahead and I'm going to remove the labels off of this because we're going to talk about various alternatives, and I don't want anybody to be confused by the labels that are sitting on the chart currently. Okay. Now, if this were a completed fourth wave correction, okay, what did we just learn through all of this of where a fourth wave correction is supposed to go? Okay. To the fourth wave of prior degree. Well, first of all, if you're just talking about just this impulse here, okay, then your guideline, you have an extension, you're looking for the second one, right? Here's a 4 and here's a 4. So at a minimum, even if this was just, say this was a first wave and all of this is going to be a second wave, right? You should be looking to go here. You haven't met a guideline yet. So in my opinion, to be buying for a long-term hold before you've reached a guideline is not high confidence. Okay. Secondly, you have another impulse to look at. You have a larger degree to look at, because this is one of the biggest things on the chart. This is way bigger than what this is, right? So this is supposed to be a smaller degree second wave. Well, you've already dwarfed what that's supposed to be, right? So then you have to consider this entire impulse from here. If this is, say this maybe, well, all the way from the bottom, right? This is kind of the biggest thing other than this right here. Let me go to a bigger time frame so you can see it. Let's go to the daily. Okay. This is the biggest thing since this, right? So say this is all a 1, right? And not a 5 of 5 of 5 of 5, like this count suggests, right? You're not even close. Like your guideline is way down here at 40,000. So this could all be correct. 5 waves down, 3 back, and then you're getting 5 down into the guideline. If that's a second wave, right? And then you have 1 and 2 as a setup. This isn't deep enough yet to be high confidence of anything. So you have to take that kind of stuff into consideration. Instead of just, buying because some moon boy out there says it's time to buy. Now, those are guidelines, okay, obviously. They're not rules. But if that's all a 1, then that's where we should be going, is down here to 38.5, near the terminus of the previous fourth wave. When you take the whole view into totality, okay, and we bring this figure 2-6 back into play, all right, we have a textbook behavior here of what this is supposed to look like. And that's what I wanted to bring to your attention. Right, hit that like button, smash that subscribe button, consider the Discord. Go to wavecounts.com. You can sign up for free. Until next time, we'll see you.